with Michael because Axion works globally, and I think one of the interesting. I mean, America's not the only country that has a dream. America's not the only country that feels that things have gone a bit astray in recent years. You work globally, and I was wondering what you have learned abroad that you think could be useful in America right now, for investors to think about, investing lessons.
So, first of all, just to go back to the top question of,
Okay.
I'm in the category of saying, no, I don't think investors can revive the American dream. I think the American dream is a much bigger construct of working hard and going to college and often working at companies for your entire life. And the last 3.5 decades of zero wage growth for 90% of the country, these are much more deeply rooted problems, and the solutions have much more to do with tax policy and minimum wage and healthcare and bigger issues. That said, I do think that investors can play a role. There's 90 million Americans who are un- and underbanked. Half of the working population in this country lives paycheck to paycheck. And I do think that impact investing can help to meet the needs of that population. That's a very, very large population. I think there's a lot to learn from abroad. In the rest of the world, Axion focuses on financial inclusion, bringing the financial tools that people need to help themselves all around the world. And I do think that the rest of the world often has cabinet-level ministers and national plans focused on financial inclusion. And here in this country, we don't even talk about it. We don't even think about it. In the last year of the Obama term, they finally had a treasury. They finally convened something on financial inclusion. The rest of the world is way ahead of us on that. And I'd say the most important lesson is simply that intentionality. If you make it a priority and say, we want to make a difference, then you put together the resources and you put together the plan, and then that can be a rallying point and is making a huge impact in other countries around the world, and it's sort of ignored here.
Okay, so I've decided two things about chairing this panel, and the first is that I'm going to, each person, the first time I ask you a question, I'm going to ask you your answer to the investors reviving the American dream question, and also, now I've forgotten what the second one was. It'll occur to me. No, I know. I'm going to keep a running tab of things that can be done. Okay, so I've got get financial inclusion on government's agenda now. Keisha, can investors help revive the American dream, and if so, how?
Certainly, I hope so, in that I'm an investor, and my goal, I'm not taking on the responsibility of reviving the American dream, but I am very much concerned about the racial wealth gap here in America. When you look at black and brown people in America, they have 6 and 7 cents on the dollar to every, for every dollar white wealth. There's a study that says if we were to hold things constant today, it would take 228 years for black wealth to catch up to that amount of white wealth. And that, as we grow, this country grows into a majority country by the year 2043, 2050. If the racial wealth gap isn't addressed, you will have black and brown people in this country that have zero wealth. So I am concerned about ways in which we can be intentional about inclusion, and that's financial inclusion, that's ownership inclusion, and various aspects, using business as a tool in our case to begin to chip away at something that I think obviously is not good for black or brown people, but is not good for this country.
Do you want to give us an example or two?
Of
ways in which investment can help to narrow the racial wealth gap, like specific projects or specific tools?
Yeah, it's a big challenge for us as an impact investment fund. We're investing in tech-enabled businesses or software companies that are identifying overlooked opportunities in underserved markets and really leveraging and utilizing business as a tool to create more efficiencies and to tweak models. And these are thriving economies. People do spend money. Low-income people spend a lot of money. Some would say more money than they should be spending. But if you can tweak these models and create more efficiencies, can you then share income and potentially wealth in some cases with key stakeholders, whether those are the service providers or the customers or key stakeholders to generate additional income. We're invested quickly in a company, Maven, that's an e-commerce platform that's providing opportunities for independent hairstylists, which in America they make on average $24,000 a year. The Maven hairstylists make less than that. But this is allowing these hairstylists to sell products direct to their customers and earn a commission check each week. If you're low income, I grew up low income, earning $100, $200, $300 each week is significant.
Mm-hmm. Jim, so you do it's a large fund in its early stage. So first your answer to the big question,
Yeah,
but also...
so a couple thoughts, and I've been thinking a lot about it. So number one, I think definitionally, the reason why nobody raised their hand on American Dream is I'm not even sure any of us are clear what that is. And so I think...
you will not make a politician. You've straight away failed the first test. You have to sound much more convincing than that on the American Dream.
And I think... But the component pieces, I think all of us deeply believe in the importance of opportunity and some kind of meritocracy and the distribution of safety net services. Mm-hmm. And actually, if it were up to me, I would have actually changed this question from can investors revive the American dream to can investors ignore the American dream?
What do you mean?
So I just think all of us are, one way or another, vested to the outcome of what's happening in our world today. And I mean, our whole premise today is around this urgency that we're all convened here for. And there is no economy on a long-term basis. There's no democracy on a long-term basis unless we begin to chunk away. And that's our reason to be. We believe that early stage investments in for-profit and nonprofit entities are in fact the building block, but not because we can solve the American dream, but we can pick away at the determinants that prohibit and constrain opportunity. And we've made 134 investments since 2002, and many of those have in fact begun to change the equation that prohibits people from having opportunity, that prohibits access to healthcare. And intentionality, is so important in this. And again, I think one of the things that gets missed in the noise around impact investing is that it's not some jargon, it's not some trillion-dollar pool of money that magically will cure the world. It's actually evidenced by people day in, day out trying to mitigate, not solve, but mitigate first the consequences of inequality across this country.
Can you give me an example or two from recent investments?
Sure. So education superhighways in our portfolio. One of the just remarkable constraints that exist for schools is the lack of broadband. And Evan Marwell and his team realized early on that there was this huge problem that many schools across the country, again, there's a social justice angle here, the wealthiest schools have the best broadband, paying the least amount of money, and the same school a mile away, not as wealthy, is paying 12 times for that broadband and getting a 16th of the speed. They figured out that we could use it's complicated, but anyhow, they figured out how to use the E-Ray capital. And today we're on the cusp of having broadband throughout all our schools. And that's just one crisis text line. Knows that kids today in crisis do not call an 800 number. Nancy Lubin and her team realized that by having texts available, they could have and get help as fast as possible. She's processed 54 million texts. And worse, she's going to double that number in 1 year. So these are the kinds of things that can happen. And everyone, Evan, Nancy, and the other 132 folks weren't just privileged or had an unbelievable access to capital. They just walked by folks who did not have their advantages and didn't do what so many do, which is just keep walking by, but really said, I got to make a difference here. So,
Andy, your answer.
So,
or reframing of the question, feel free.
yeah, so one, I believe the American dream is still very much alive in this country, right? So I see how my grandfather immigrated, and I see how so many people are still wanting to immigrate to this country, and it's not for a worse life, it's for a better life. And I think that's one of the definitions of the American dream that we can all agree to, is to make your life and your family's life better. And I think that's always been part of the equation of the American dream. So I believe deeply that investors in the private sector can keep pushing the evolution of the American dream and keeping it vital to what our economy is and why we are still probably the country with the most intention for people to emigrate to.
Do you want to give us an example from the work that you do?
Sure. So I'm a little bit different, right? We're a traditional fund. We don't consider ourselves an impact fund, but we do have very strong ESG components through our culture, through the fund, and in all of our portfolio companies. But we are 100% driven by returns and by maximizing the capital of our investors. So we've been able to implement a strategy that we believe, especially in the lower middle market companies that we invest in, that having an ESG focus and benchmarking and creating certain ESG focuses for each of our portfolio companies, ESG can be and should be an alpha creator for our investments. And I think that's one way that this country should start seeing it. I think Europe is ahead of us in that they, excuse me, see ESG or SRI, whatever you want to call it, as something that is quite beneficial to the underlying companies and can hopefully start people thinking more about long-termism instead of current comp right away. So if you look at some of our portfolio companies, I can take Raimundo's, for example, is a lower middle market Hispanic-focused CPG company that does snack foods, desserts, and treats focused on the Hispanic taste. So we bought that company. It had very little diversity throughout the spectrum. The workers had some minor injury in the manufacturing every week to 2 weeks. There was no real, the machinery was old and tired. So we went through, in our 100-day plan, we found ways that we could implement some very quick ways. One was increasing salaries of people, right? Again, not to reduce the benefit to the bottom line, but we felt that increasing salaries for the entire spectrum of the lower half of the workforce would actually create higher EBITDA because it would cause less training, less turnover, a happier, which I think people kind of lose sight of. But having a happy workforce is extremely important to us, and I think people all over the spectrum don't view that as important enough. So we elevated wages, we started increasing and giving benefits, we upgraded machinery, we implemented certain cultural benefits to having a safer workforce. So we went from every 6 to 10 days, some minor injury, to over 11 and a half months with any issue, which generated a less turnover, a more stable workforce, higher productivity, less water and stuff going into the ground for the environment, a more efficient manufacturing process. We became SQF2 certified. So some of our retailers, which some of the companies we purchase don't understand, that retailers are starting to desire that you become SQF2 certified, or 3 even, to prove that you are treating your work process properly and that you have an efficient, safe, clean manufacturing process, which helps you sell, so should elevate sales. So all that has a cost to it. We were just talking to an investor of ours, and we were talking about assimilation into the country. We have a lot of first-generation employees, and we decided through that conversation that we should be implementing a education program for our workers. So we are, by the end of this quarter, we'll have a English classes being given to our workers and their families. So after work, if their kids are home or if their parents or their siblings want to attend class, we will help them learn the language so they can assimilate into our country, becoming hopefully more effective citizens and easier for them to get jobs, but also so that they can communicate better with the rest of the workforce and be better employees. So those are some of the things we've done. There's probably another 4 or 5 examples within that one portfolio company, but each portfolio company has different benchmarks and different things that we are trying to do.
I'm making a connection between what you're saying and something that someone said on one of the earlier panels, which was that a potential downside of thinking about impact investing as a separate category is that it sort of suggests the rest of it has no impact, or that basically capitalism is so bad that unless you dress it up a bit, then
Well, I will say it also can have a negative connotation where. I mean, I talk to some of my peers, and you talk about impact investing, and they're like, "Why would I give up returns?"
Yeah, sure.
Right, and so I don't think that's true. I think when done, look, I think there are some strategies where some, very large investors or philanthropic people want to be able to have lower returns to make a major macro impact on parts of the country or segments of the population, that's fine. That is not what we do. But when it all gets bunched together into impact investing, I think people see that as one component of impact investing, that it will automatically return lower returns.
Both these gentlemen here are sort of can I come in now? Do you want to go?
Well, first of all, I do share the view that in the range of impact investing, there's people working on healthcare and education and clean water, and there may be real trade-offs between social
Sure.
impact and
Absolutely.
financial return. We focus on fintech and financial inclusion, and in that space, unequivocally, there's no trade-off at all. We're seeing tremendous innovation all around the world, and these companies are early stage, and they may have lots of problems, and they could fail for lots of reasons, but if they succeed, they're going to have a huge social impact and a great financial return.
So presumably, to the extent that it needs some special label, it's more about the risk
Yeah, I think
rather than the returns as such.
yes, and there are people who don't like the term impact investing because it does imply
Absolutely.
something negative, but there are other people that are very much attracted to it.
Yeah, interesting.
Yeah. So again, I think I don't mean to repeat again a misnomer, but I think impact investing is a misnomer because, again, it implies a special pool of capital that's waiting to be deployed that magically will change things. I think so. Yes to what Andy said, and yes, of course, to what Michael said, but there are inherently challenges we have in our society today that require some form of subsidy and cannot and should not be driven in a way in which investors are expecting a market return. And that's because government had a role to play in this, and government has a role to play. And when you think about whatever everybody thinks about the American dream, let's just stipulate that there's one there. If you go historically, that dream was for sure secured in part by public policy that drove the attainment of that. Today, that's really hard to see. And it doesn't mean that the private sector does not have a role to play. It does. But it's just a false belief that investors can solve these issues. At the end of the day, virtually everything we invest in, for-profit or nonprofit, relies on an end game that somehow, some way, some sovereign is going to adopt the mission of the entity. And that's whether it's for-profit or nonprofit, because that's where the largest capital distribution system is when you're dealing with inequities. And I just think we have to keep, this is not just a private market solution set. These are generationally created challenges that remain persistent.
I want to take Keisha's in my
Please.
blind spot.
Yeah,
unfortunately.
no,
Sorry.
that's okay.
So I'm very aware of
Yeah.
that.
Yeah.
I want to bring you in here.
Sort of a yes and, what we're really excited about, everyone read or heard of the letter that Larry Fink from CEO BlackRock sent out to its portfolio CEOs. And just recently, one of our alternative finance companies and early stage companies received, collaborated and is in partnership with a large public company that's in the alternative finance space, and their largest institutional investor is BlackRock. So you have these great worlds meeting of, we're investing in an innovative company that's trying to bring transparency to financial services in an industry that some would be, frown their eyes at in terms of being a dirty industry to some extent, but there's more regulation there than people realize. And now you have, a large public company that's been in this industry for a very long time as a partner. So our approach, and I think, what we're all kind of saying here is that, it's sort of the chipping away at it. We were intentional about getting a board seat so that we could be in partnership with this large public company. And the goal is, now that we have access and we're in conversation, and they're intentionally engaging us as a partner because we're bringing this level of social responsibility and community engagement, what does it look like when we begin to move the needle inside of some of these larger partners, corporations, and, to Jim's point, government organizations?
So when we put things on the cover of The Economist, we often have this problem that, like, you've got, one image and 3 words or 5 words, and you end up, you do oversimplify. And it's part of the skill of the cover designers to come up with something that doesn't distort too much, but is very punchy. So I think we can all say, can investors revive the American dream is sort of at the level of a cover image, So I think maybe a more fruitful way for us to think about it is, what should and could investors be doing, to help forward these sorts of goals? You see, that would be terrible on a cover, wouldn't it? So
I
you
think
see our
there's
problem.
There's a different way to edit the question. If you say, can investors revive the American dream, I say no. If you say, can investors help revive the American dream?
I suggested that
I'm
one
on
early.
board.
Those
I'm
words
totally
like
on
help
board.
get crossed out of cover.
No, because I think we
taglines.
can make an impact, and
Yeah.
I think all of us are trying to make an impact, and I think that is real. But I don't think we can resuscitate an American dream that is. But going back specifically to like lessons we can learn from other countries and innovations we're seeing, it's a very, very exciting time in the fintech world. I'll give you an example. Using data and data analytics, there are new models and new ways of lending to small and medium businesses that are banks all around the world, but banks especially in the U.S. have ignored. I'll give you an example. 4 countries in Latin America, Brazil, Mexico, Colombia, and Chile, now have requirements for digital receipts and digital invoices for every business. Now, their motive was for tax compliance. That's fine. But what that is doing is opening up an entire new stream of data, and we're seeing really exciting innovators use that data to assess the needs of these small businesses and lend to them. And so if you did that in the United States, you would be helping to revive the American dream for those small mom and pop shops.
So I was our Brazil correspondent for 4 years.
There
So
you
I'm actually
go.
very interested in this. You must tell me more about this.
Oh, there
afterwards
are
at a level
real
of
companies that
detail
are doing
couldn't-
great, that are doing
couldn't survive
exactly
this.
this. There are a couple of other themes I could describe if you like.
Keisha,
Yep.
so you've really straddled the sort of the full blown just going and investing in traditional way, but also I guess because of your background, is that fair to say? You decided that you wanted to work with the community as well. How did that work? How do you bridge that?
Yeah, it's really, the role that I've created for myself merges all of the various phases of my life. So I was fortunate, I like to say fortunate, to grow up on welfare, Section 8 housing in Orange County, California. I was also fortunate to attend UC Berkeley and receive a mathematics degree, work on Wall Street. And I think I was most fortunate to return to remove myself, no offense to any of you in this room, but from the big corporate building and actually spend time on the street and work with small mom and pop businesses for about 5 years. And these were companies based in LA that had very few resources, but a lot of talent, drive, and ambition. And I realized at that point that there wasn't the supportive ecosystem that existed on Wall Street for these small businesses to thrive. And so, went to Columbia Business School, worked at Bridges Ventures in London, came back to the States, did some work. I think he left the conference, but had an opportunity to work with Josh Mellman for a few years, and then launched this fund. So this fund isn't, I'm not the new kid on the block, so to speak. It's a new fund, but this fund is really built out of my passion and intention for creating change using business and finance for underserved communities, which I think I'm fortunate every day to wake up and be able to do this work in an authentic way that relates to my purpose, my passion, and my skill set.
So I presume you've had to by now hone an elevator pitch length version of what you've learned from these very different elements of your life. Are you able to share that with us?
My pitch version of what I've learned?
No, just really short.
Short.
Yeah. Like people will say to you, "Wow, that's quite a journey." What
That's
have you
quite a
learned?
journey. I've learned that it's a difficult journey, but it's a journey worth taking.
Okay, wow, that was shorter than an elevator pitch. That's great. You should do cover.
like a one
do cover
floor.
strap-ons.
You made me nervous.
Right.
So we have a question come in on the app. Is there a way for the private market to solicit and manage government investment and impact investing? So Jim is sighing and nodding, so I think that's...
Yeah, well, I've had 5 minutes to read it.
Don't give away the tricks.
yeah.
I don't want to tell them it was there already.
So de-risking is the way that the private market can incent both government and philanthropic investments in things that might not otherwise go there. And the reverse is true with my Kresge Foundation hat on. We've been pretty early in fairly significant capital de-risking private sector, and by that I mean financial sector investments in the Healthy Futures Fund, for example, or in the housing market, for example. And that is a way to allow, the premise of that, our theory of change, is by de-risking it so that investors can begin to have some exposure but not full exposure.
So de-risking using, for example, first-year capital or whatever.
Exactly, yes.
Okay.
Some loss reserve,
Right.
but not de-risking it so much that essentially it's already baked, is a way to drive significant amounts of capital. Now, it's not Andy's kind of investment, because at the end of the day, it isn't sitting on its own with both the upside and the downside, but that is a way, and we see it all the time. The other thing I would say, too, if you look at Detroit and then look at the fundamental constructs that the Kresge Foundation faced starting in essentially 1995 and working its way through it, we have been able to bring private sector actors into Detroit to rebuild against really what is sovereign responsibility, light transportation, because it was an auto town. There was no railroad. There's no ability for people to get to the places where there is employment from where they live. And again, I think that's an example where intentionality, in this case place-based, can bring all actors together in a meaningful way that's not going to revive the American dream, but is going to make a material difference for a city. And there are lots of cities that have these challenges: Baltimore, Oakland, Newark. You can see them, and that's a way where you can really make a difference, I think, in a consolidated way.
Mm-hmm. Anyone else on the panel want to chip in on this one?
There is an enormous role for governments in making this important, but the way the question is worded is it implies government resources that are managed privately to do impact investing. I think there's a big role of government, but I don't think this is it.
Right. So what do you see
so
as
for
that?
example, in India probably wins the award for a government that is so intentional. The Modi government has really made this a priority. They've created a universal ID for 1.3 billion people that's biometric. They've created payment bank licenses, small bank licenses, bank accounts for people that have been ignored by the banking system. And it is open, the demonetization. They took significant amounts of cash out of the economy to encourage digital. And it is creating a very exciting environment where impact investors are, we're seeing a lot of innovation and a lot of success in meeting the financial needs of people who've been left out. So the government is creating the environment, but it's not providing the capital and asking someone else to manage it. It's doing everything but that.
Andy, do you find yourself at this sort of event or in these sort of groups with impact-style investment people much?
No.
No. Welcome. What do you want? So you
Never.
have a really priceless moment here now. What do you want to tell them from the point of view of somebody who's a traditional investor, but obviously cares a lot about ESG? What do you want them to consider really from the traditional investment side?
Well, I think everybody has their own purpose in life, right? And our purpose is to do the right thing by the companies that we are buying into, the sellers who partner with us, their families, and all the employees and all the stakeholders. And I think it's important that we realize that at the end of the day, money needs to make money to make this country, this economy move. And like I said, I think there is ways that ESG, especially in the sector that we focus on, can be alpha creative and can impact more than just our pockets, but other people's. Like we recently implemented something we call the AUA rule. So even through our portfolio company and all of the fund and all of our portfolio companies, whenever we hire anything from middle management or above, we have to have qualified, diverse recruits in that class. So has to be ethnic and gender diversity. And if we hire a headhunter, help us fill that position. If there is not a gender and ethnic diverse group, when we make that hire, that headhunter knows up front they will not get paid for the search. So that not only helps us to hire a diverse workforce, but it puts all of our headhunters on notice that they need to start looking for a diverse pool of candidates, both ethnic and gender. And that will eventually fill our board, our C-suite, and our middle management with a more inclusive population that matches this country, that gets us the ability to have a more open, easy to understand conversation about how we're going to go to market and build market share and create more profits for our businesses, but at the same time is putting the word out that these things can be helpful to the bottom line. And I think that type of not just inward looking, but ways that we can impact some of our partners is extremely
I
helpful.
mean, it's an evangelizing role, really,
Right.
to some extent.
I just wanted to point out that we have 55 donor partners, the vast majority of which are highly successful venture capitalists. And so, this is not it's either that side or this side.
No.
It's one side. We're in
Right.
one place. I don't want to get lost in this conversation. It's not just money. In fact, money is actually the smallest resource that's needed here. In all of our investments, our legacy is venture capital. Bill Draper is one of the most successful venture capitalists in the country. We're applying the same discipline to every one of these organizations that Andy does in his portfolio.
Correct.
We sit on these boards. It's a human resource that really is required. So it isn't like everybody's got to put a ton of dough into the space. But for sure, if we don't start putting a ton of our time into this space, the consequences are going to be profound.
I agree.
Hi, Dan Zook. I work in blended finance for agriculture. We heard on panels earlier that venture capitalists tend to follow the herd a bit. So companies like Pigeonly don't get funded because they don't fit into the archetype mold of an entrepreneur. A question for Keisha and Michael. How do you find pipeline?
Great question. And there was another hand up here. I'll take this question too, and then we can.
Thanks. I'm Becky Regan from the Housing Partnership Network. Hi, Jim. I raise capital for nonprofit affordable housing developers, and I'm curious what the board, what the group thinks about in the proposed tax bill, the Investing and Opportunity Act and Opportunity Zones, which is deferring unrealized capital gains on investments.
Great. Okay, so pipeline and the tax bill. Keisha, do you want to start on pipeline?
Yeah, for us, our thesis is that there are large overlooked opportunities in underserved communities. Our portfolio and our pipeline over-indexes with people of color and women. I haven't done the study yet, but there's probably something to say that, and our entrepreneurs are more mature. They're 35 to 50 years old. And what we're seeing is that people, when you're in corporate environments, I come from a corporate environment, Stephanie, my associate, comes from a corporate environment. Our portfolio founders have spent 10 years plus in corporate environments in some cases, that you want to change that atmosphere. You want to build a company that within its DNA is inclusive. And so, and what we're learning is that this isn't, there are more people out there that care about these issues. I think what we're all talking about, like we're about to hit our heads against a big wall, and there are people that care about these issues. So from a pipeline standpoint, we actually have not as much trouble as one would believe because we are a diverse team, and our thesis is to impact, diverse markets.
Do you find the diversity of your team, Andy, helps on pipeline?
Absolutely. Absolutely. All types of diversity, right? Like I said, diversity is extremely important to us. One, because we're selling to a multicultural base. So when I used to speak on behalf of my family's business, which is a Hispanic food company, we'd have big CPG companies trying to compete against us, Campbell's, Nestle, often threatening to put us out of business. One thing that they always did wrong is they would go out there and market to the Hispanics when we were out there marketing as Hispanics. Mm-hmm. And that's a very big difference, mm-hmm. right? So understanding a culture by living it is very different than understanding a culture by reading about it.
I mean, it's a very undiverse community, the investment community, so I think that's...
Yes and no, right?
Yeah,
So,
maybe some bits of it
right,
not,
right.
but I mean, large bits of it really are.
Right,
So.
but I do think the diversity helps us on all aspects, right? So it's extremely important to us and core to our culture.
So on pipeline, Axiom grew up in microfinance, and over our history, we grew up in Latin America and then expanded in Africa, India, China, the Philippines, most recently Myanmar. We've over history helped to build 65 microfinance institutions in 34 countries that are today serving millions. That network and our staff all around the world for the last several years have been really focused on fintech and innovation. And we've created two vehicles. One is the Axiom Frontier Inclusion Fund, which is the world's first global fintech fund for the underserved, $140 million fund. And we've created Venture Lab, which is the leading seed stage investor for fintech for inclusion. So now, since we've been doing that, we've looked at thousands of companies. And because we're willing to invest earlier and work with these companies, we see no shortage at all of incredible pipeline. Now you're seeing literally thousands. Now you have to screen them, and it takes more than a great idea. It takes a great team. It takes the right time. There are a lot of other factors for success. But again, I'm only talking about fintech for inclusion. Other parts of impact investing I don't know about.
Right.
But in that area, it's exploding. It is such an exciting time to be in terms of pipeline.
And we see a ton of pipeline across, both the domestic lens, and I'll defer to Michael on the international lens. But I think one of the things that gives us great joy is a feeling that there's no diminution of the entrepreneurial spirit and folks who really do believe that they can make a difference. And yes, some of them are better equipped than others. But folks who talk about a pipeline problem, I think it's more attributed to network, or there's a lot of truth to being on the ground in the spaces in which you're trying to develop investable opportunities. And that, by the way, is true domestically. I mean, this Rise of the Rest activity that Steve Case is driving to try to figure out how do we find fundable ecosystems to drive economic opportunity. And they're totally focused on private sector. They're not driven by social impact, but their belief is that if we can't build ecosystems that are outside of New York, Boston, San Francisco, Los Angeles, and Seattle, we have a real problem. And so, again, I think being on the ground, being exposed to it, convening, we do a ton of it, really, at the end of the day, makes a significant difference.
Any of the panel like to take up the question about the tax bill?
Nope.
Haven't read it yet.
I'm happy. Only to touch on this, I don't know anything about the particular proposal, but opportunity zones sound a lot like economic empowerment zones. There have been a lot of examples in American history and in New York history in particular that have just utterly failed.
Yeah.
So I am quite skeptical.
And I don't know enough about it to speak in detail. We're obviously curious about it, and I'd say, it's, capital gains deferment could be used in a good way if it's intentionally invested into areas with accountability and structure. But for the sake of protecting capital gains, obviously, I don't think that's.
We're just happy that instruments like new market tax credits are still alive. Because if you want to look at what has really driven economic opportunity, take a look at the effect of new market tax credit, and not just on housing, but on community health centers, on arts and cultural institutions.
I agree.
And so, a lot of us were worried that was going to evaporate, and that would be a serious impediment. But the fact that that's still there, to us, is a huge win.
Hi, my name is Anshul Arora. I work with an education group in India. I just wanted to give a perspective of, I've benefited greatly from studying in this country, and I wanted to give a bit of a perspective of how I see the American dream from the outside. And I think many countries are grounded by different things, rich culture, rich history. And United States is a relatively younger country. What really binds people from very different walks of life is this political ideology or pursuit of life, liberty, and the pursuit of happiness, which we're all talking about. But I think the other thing, which we don't talk as much about on a macro level, maybe within organizations, is that it's really a melting pot of very, very different cultures, of backgrounds. And as we know in our organizations, it may be more difficult to build something with diversity, but in the long term, it comes up with much, much more powerful solutions. And so I just think right now, as I see the United States and the press, and I think it's very dangerous to start to pursue that amazing ideology, but not with the same intent and approach of diversity. And if we continue to do that, I think it'll lead to much more powerful outcomes.
As I said, I was making some notes about what I could conclude from it. I don't know that I've got anything very coherent to say, but I was struck by the idea that one of the things that investors could bring to the American dream is themselves rather than their money.
Right.
So intentionality, the way they run their own businesses, the way they expect other people to run their businesses, In particular, I mean, it doesn't take a genius to look at America and see that it's quite split down the middle right now. So knitting things together again, like trying to bring people together, to look at diversity as something that mixes people, not separates them. And then the other one that I wrote down, which is rather specific, was getting financial inclusion onto the government's agenda. So I think this is investors as themselves rather than as their money only. You know, setting agenda.
Yeah.
I mean, maybe each of you would just like to briefly comment, we've just got a couple of minutes on the clock, on what you would like to add to your opening statement about the American dream.
I mean, I just think that the urgency, forget attribution and why, so set that aside. I think that everybody who's in this room should talk to 100 other people, wherever they are, and just be clear that no one is going to fix these problems. There's no magic, there's no legion of superheroes that's going to appear. These problems are persistent, and they're going to affect every investor in this country and in this world unless they're addressed and addressed now. And so my point was, your money's interesting, but at the end of the day, it's in your own super self-interest to get engaged at the front line and not rely on anybody else. And Larry's article about why it was really important for private sector actors to, get engaged is it's a competitive advantage. I mean, the people we're all employing have as a first order of preference the idea that they want to know that aside from selling things or providing services, that it is to a greater good. And that's so easy to do, and yet so many people don't do it. So that's...
Michael, what would you add to what you said?
It's a little hard. When you talk about the American dream, I always thought the immigrant experience is a big part of that, and yet in the current political landscape, the hostility to immigrants is a little bit shocking given the history of this country. It's hard for me to imagine reviving the American dream till we have a more coherent policy on immigration and sort of put those debates to bed and move forward. But we think of the United States as such a wealthy country, and yet half of working Americans are literally living paycheck to paycheck. That's struggling. That is really hard. Literally, they can't get $4,000 in an emergency or $400 in a pinch in a day. That's really struggling. Those are problems that, again, some of it requires big government action, but some of it also requires innovation and finding new tools to help people. And I do think there's much we can learn from the rest of the world and bring here.
Keisha.
Yeah, building on the competitive advantage, what's exciting about our portfolio companies is that they're building companies with inherent impact. So by the nature of how that business is constructed, the impact that they're having directly ties to the revenue and the financial growth of that company. And these are, again, it's sort of, we need to talk about the big systems and the issues with the big systems. But when you start to peel back the layers, we're invested in a software company that's helping large corporations better identify, support, and increase supplier diversity. That, sounds like a small thing, but that's huge when you think about the billions of dollars that corporations spend with suppliers. And if we can move the needle on increasing women, veteran, minority-owned companies in that supply chain through the use of innovation, we began to then create jobs, people that, hire people that look like them. That's kind of how we got ourselves in this mess. But so there are things, I would say, think big, but also think practical. What can be done with a tech tool, some innovation, some hard work, rolling up your sleeves, and I think you'd be amazed and surprised by the outcomes of that.
Andy.
Yeah, I would just echo what Jim was saying, is that there is no magic solution, but if everybody tries to see a long-term plan, and there's lots of ways to help in fomenting the American dream. I do believe it's still alive and kicking, and still believe 100%. I'm grateful that my grandfather emigrated here, and this is the best country in the world, and that's why I plan to spend the rest of my life here, with many options to leave if I wanted, but I would never even think about it. But I think if we all find ways to foment that American dream, to doing small things like myself, to larger things like my three co-panelists here, I think we will all help foment the American dream and have different ways of fixing it.